please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Sanjeev, I want to pick up on the point that Nandan made, that you've looked at over 100 companies or so since you decided to set up Fundamentum. You haven't made your first investment just yet, and you hope to be able to do that over the next few months. What, if I may ask, has held you back? I mean, obviously, you've seen a lot of companies with potential, but you and I have spoken of an issue that has concerned you, and that is the ability of Indian startups to scale up as well as to replicate their business model. Has that been a constraint on your decision to invest so far?
I think, Shireen, a couple of responses there. One, since we want to build a very concentrated portfolio, we want to make sure that we do the right curation around entrepreneurs who want to build large businesses in large markets. So unlike the early stage funding business, which tends to be about optionality and making several optional bets, we are in this with the company for long haul. And therefore, the assessment process is a lot more detailed than a startup, because we are committing our capital and time. Two, I think I have certainly seen personally cleansing of the ecosystem from what it was 2-3 years back to now. Now I think the focus on customer unit economics, building a culture and do it for long haul versus building companies for valuation and exits. I think the transition is certainly underway, and the entrepreneurs who are coming into the fray are a lot more committed. So I don't think we are opportunity constrained. It's just that we want to be very selective in whom we work with, both in terms of chemistry and people who want our help in building an institution.
Nandan, if I may ask you, any area in specific of the companies and the entrepreneurs that you've examined, evaluated so far, any specific areas that you believe are the ones that you would like to back, that look most promising, most exciting to you at this point in time?
Well, let me first say where it is that we are not going to invest. We are not going to invest in large horizontal markets where it's all about people outplaying on capital. That's not where we want to invest. We don't want to invest in places where the unit economics is not working out, where you're buying clients. And we are not going to invest in areas where customer acquisition is very expensive. So we're looking for more vertical markets, India-focused, which have organic customer acquisition by virality as opposed to by spending money, and for companies that have either reached unit economics or about to reach unit economics. And we are looking at areas today in travel, in vertical retail, and a couple of other sectors like that.
You're watching the CNBC TV18 exclusive. We're in conversation with Nandan Nilekani and Sanjeev Agarwal, founding partners at Fundamentum Partnership, and Michael Sabia, the president and CEO of CDPQ. CDPQ investing $20 million in Fundamentum. Michael Sabia, let me ask you, outside of the investment that you've done in Fundamentum, about the India story. You know, you're excited about the opportunity in the renewables space. You're looking at the stressed assets opportunity in India as well. Can you give me a sense of what is the current level of investment in India and where we could see that headed?
Sure. Up to today, we've invested about $4.5 billion US in India. That's, in our minds, that's a relatively small amount for an economy of the size and the growth potential of India. So that we're clearly working on increasing that number step by step. What we're announcing today is one small step in that direction, and hopefully it'll become an even bigger step going forward. In terms of areas that are of interest to us, as you mentioned, we've done a lot and will continue to do more in financial services. We're very interested in logistics, where we think there are big opportunities in India, given both the emergence of e-commerce, and second, all the important changes that will flow from the GST. We're very interested. We've done some, and we'd like to do more, much more investing in renewables, renewable energy. India's energy requirements are obvious to everyone, and the fact that they will have to be increasingly climate conscious seems to us to be a strong and underlying trend that we would like to be part of. In addition to that, we're also very interested in the consumer product space. That's an area where we think there could be some very interesting opportunities coming forward. Similarly, in healthcare, that's another area of considerable interest to us. So what we're trying to do is to do more of some of the things that we've already done with some of the really good partners that we have the pleasure of working with here, to go deeper in those relationships, and also to spread out a little bit with respect to, say, consumer and healthcare, to broaden the base of the investment activities that we have. But we would like to see over the coming years a significant step up in the overall level of investment here.
So what could it be? In the next 5 years, $4.5 billion could be what, Michael Sabia?
Well, $4.5 billion will be determined by the quality of the opportunities and the quality of the partners who we find here and can continue to work with here. But I think you know, that's the $4.5 billion is a relatively small percentage of our total asset base. So I think you could expect to see some pretty substantial increases in that number over the next 5 to 7 years. But I'm not going to give you a target, because we're pretty disciplined about it's about the quality of the partner, and it's about the quality of the transaction, and the capital follows both of those two things.
Now, if I could ask you about some specific investments that you've already done. For instance, you've got about a little over a 1% stake in Kotak Mahindra Bank, and there is a requirement, a regulatory requirement there for Uday Kotak to bring down his stake by December 2018. Would that be an opportunity where you would look at upping your stake in Kotak Mahindra Bank, or, for instance, in the asset reconstruction business of Edelweiss, where again you've picked up a stake? So would those be areas where you would look to significantly up your presence and stakes?
The short answer to your question is yes to both of those. In the case of the Kotak Bank, our thinking is not driven by whether or not, or what the regulatory issues are that Uday Kotak is working on as we speak. Our interest in that is we think that is a great bank, and it has a great future. And similarly, Edelweiss, you know, we have a very, very good partnership with Rashesh Shah. We think that business, Edelweiss, is very interestingly positioned across, you know, a set of very specific financial services that are very important as India works through this important asset reconstruction challenge that it is facing. So would we be open and interested in increasing our presence in both of those businesses? Absolutely.
On the renewable side, I think it was, what, in 2016 that you had spoken of a commitment of $150 million. How much have you invested already in the renewable space so far, and where do you see that headed? Well,
yeah, our principal investment in renewables is in a company, and interestingly, Sanjeev is also an investor, and we're partners in that business as well. A solar power company that I'm sure you know of called Azure. That's our principal area of investment in renewables. But the renewable space is, so that is a pillar of what we're doing, and it's a pillar of what we will continue to do. That's a very important part of the portfolio for us here. That being said, the renewable space in India is so large with respect to both solar and wind in particular, and we would like to significantly increase, very significantly increase our exposure to both of those alternative sources of energy over the next 3 to 5 years. There's a very significant growth opportunity there, and as you know, the cost functions of those technologies have changed so much.
Yes.
That they've become so competitive against traditional power generation, that, as I say, it just opens up big opportunities. We're, I think in North America, I think we're the biggest investor in renewable energy among pension funds. So it's an area that we know a lot about, that we're very confident in the expertise of our people, and therefore, you know, we want to apply that expertise here and to build pretty substantial businesses in the renewable space in India.
You know, speaking of growth opportunities in India, Michael, what about real estate? Because your realty arm has inked a partnership with Piramal. What's the outlook as far as the Indian real estate sector is concerned, and the prospects of further investments within this sector?
Yeah, we certainly have an interest, and our real estate subsidiary has done an interesting partnership with Piramal. Ajay Piramal is a great partner of ours, and we're looking to extend and deepen that relationship with him, not just in real estate, but potentially in other areas as well. So we'll continue to look for very targeted opportunities in real estate, and probably with an emphasis on different forms of real estate financing, with probably some emphasis on the housing sector.